Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. I'm Forkast's editor-in-chief, Angie Lau. All right, let's kick off with a big blockchain move in Asia. We're talking about Shanghai here. This is China's biggest city and financial center, and it unveiled plans to build a blockchain infrastructure hub by the end of 2025. It's not too far away. And not only that, the city also wants to establish links with Hong Kong and Singapore. In a government report published on Monday, the linkage plan between the three cities include applications in fields such as digital assets, transportation, supply chain finance, and carbon management. However, the report gives no details on the amounts planned to be invested. Now, other cities in China have also announced blockchain ambitions, including the country's capital, Beijing. All right, another news, just when you thought FTX was going away, news that it's coming back in a different form. A reorganization plan may pave the way for the revival of the defunct crypto exchange FTX as an offshore entity. On Monday, the bankruptcy administrators filed a proposed plan that outlines how the company intends to settle customer claims. There are a total of 13 different classes of claims, which include FTX.com, customer entitlement claims, U.S. customer claims, and non-fungible token customer claims. Now, the final section of the proposed scheme includes plans to liquidate the estates of FTX to pay out distributions to customers and creditors in cash. However, holders of FTT, the native token of FTX, will not be receiving anything under the plan. Despite that, FTT token spiked sharply after reports on restructuring came out. From a defunct crypto exchange to a DeFi exploit now. The latest victim, Curve, a stablecoin exchange at the center of Ethereum's DeFi ecosystem. In a tweet on Monday, Curve shared that a number of stable pools have been exploited as a result of malfunctioning re-entrancy lock. In simpler words, a security breach in Viper, the programming language used for Curve's smart contracts, reportedly led to $62 million being drained from several Curve pools. In another tweet, the company said as a result of an issue in Viper compiler, other projects that use the Viper programming language could share the same vulnerability. Curve's CRV token dropped dramatically to 50 cents post-hack. The firm later managed to get back some of the money thanks to a bot operator returning almost 3,000 ETH, worth nearly $5.5 million to the platform. Moreover, lending and borrowing protocol Aave disabled its CRV borrowing function amid the panic. Just 3 short weeks ago, Curve founder Michael Egorov tweeted, "Still shocked that I haven't yet been ever affected by DeFi hacks." Well, seems a little bit like tempting fate. If you wrote that 3 weeks before the hack, his luck seems to have run out as well. He's apparently taken personal hit. That's because Egorov also borrowed over $100 million across various protocols collateralized by over 30% of Curve finance tokens in circulation. A drop in CRV token price could potentially lead to forced liquidation of Egorov's loans, creating further pressure for lending protocols like Aave, as well as Curve's governance token. So what lies ahead for the DeFi ecosystem? Well, who better to ask than veteran crypto investor Jehan Chu, co-founder and managing partner of Hong Kong-based Kenetic, a blockchain venture capital and crypto trading firm, to talk about the ramifications of the Curve exploit and a whole lot more. Good to see you, Jehan. All right, let's get straight to it here. Stablecoin exchange, we just talked about it. Curve was hit by a multi-million-dollar exploit. This is not the first attack, nor does anybody think is going to be the last. But how do we build better security in DeFi?
80% of all DeFi will be regulated, probably in the next 3 years, 3 to 5 years. And I think that the days of unregulated DeFi at the scale that we're seeing it will start to reverse. It's very clear that all the major governments, especially the American government and the SEC, are looking at DeFi. It's probably next on the hit list. And the way that the SEC has been able to choke off volumes with centralized exchanges, I think that they'll start to close in on decentralized exchanges. I think that the fact that in 2023 we're still seeing 9-figure hacks on a relatively regular basis, it doesn't bode well for the space. There's a lot of problems, I think, endemic to crypto, which are not being solved from a technology standpoint. And I think that, it's always kind of a game of cat and mouse, and the next disaster and the next hack is always over just over the next hill.
Another news lifting crypto markets is that Bitcoin whale Michael Saylor's MicroStrategy is planning to sell up to $750 million in stock, possibly to buy more Bitcoins. What do you make of it?
So them adding more Bitcoin, I think, is positive, but doesn't move the needle as much as it might have, say, in 2021, when having a publicly listed kind of vehicle buying Bitcoin was a much more novel concept. I think that, again, Larry Fink and BlackRock and other types of banking leaders of that ilk are much more relevant in terms of driving positive narrative in the crypto space and have much more impact. I think that one of the things we hopefully can look forward to is what Elon is going to do in terms of X and the rumors around Doge. That could be a really, really positive retail narrative that I think people can get behind and could drive a resurgence in alts to a degree that maybe we haven't seen in the past 6 months.
And what altcoins are you bullish on?
There's so many altcoins that I'm bullish on, WorldCoin, and other coins that have a similar type of AI-related narrative, like Render, decentralized 3D graphics processing unit coin. I'm also quite positive on some of the other chains that are challenging Ethereum, like Aptos and such. SEI Network, SEI Network, has also just launched and listed on Binance. As far as other ecosystems like Solana, I think that actually Solana has weathered quite well. They've been able to maintain a lot of their community and again, narrative and developers. I think that Solana probably suffers from what most chains suffer from, which is a lack of real-world use cases at scale and real-world adoption of decentralized applications. And I think that that's really the next frontier for a lot of these chains.
Yeah, we just witnessed Litecoin's third halving cycle on Wednesday that cuts miners' rewards in half and reduces supply of its native tokens, LTCs. And previously, the halving did not drive prices up immediately. But what impact do you think this is going to create this time?
The halving obviously should drive prices in the short term, but also since people know it's coming, it's probably somewhat priced in. I think the bigger problem for Litecoin is just that most people don't really have a connection to it. Litecoin, doesn't really have strong, I would say, resonance in the crypto community that it used to have in the early days, 2015, 16. And it sort of seems like just this kind of, left behind community and token without a whole lot of real utility. It doesn't have the name brand of Bitcoin, and doesn't really have the community of Doge.
All right, we're going to wrap it up on that positive note, Jehan. Hey, thanks for joining us and thanks for sharing your insights. Always a pleasure to speak with you. Time for a quick break now, but we will check in on the NFT markets when we come back.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, thanks for staying on with Forkast IQ, and welcome back. I'm Angie Lau, Forkast Editor-in-Chief. All right, Bitcoin Ordinals hit the NFT markets with a big bang this year in May, but even as Ordinals continue to notch up, their profitability and revenues has struggled to keep pace. Will Ordinals recover from the sales slump? Forkast Zoltan Vardai tells us what the industry experts think.
Ordinals inscriptions, an iteration of non-fungible tokens or NFTs on the Bitcoin network, has seen declining profitability through the month of July, as per data from Forkast Labs. Monthly NFT services revenue, which is the sum of marketplace fees and creator royalties on the Bitcoin network, fell to $1.22 million in July, down from $3.13 million in June. Lower NFT services revenue suggests lower profitability for Ordinal sales on the Bitcoin network. Now, the falling profitability of Ordinals comes during an overall NFT downtrend. The Forkast 500 NFT index, a gauge of the health of the NFT markets, hit a new all-time low on July 28, having dropped more than 9% over the course of the month. Kadan Stadelman of blockchain infrastructure firm Komodo told Forkast the oversaturation of Ordinals market was among the main factors contributing to the declining profitability. But hope is not lost, as Stadelman added. With an influx of new projects and artists entering the space, buyers now face a plethora of options, diluting the value and appeal of individual pieces. Ordinal profitability will likely recover as Bitcoin moves into a bull market. Meanwhile, Ordinals-related transactions grew to over 93,000 in July, up from 68,000 in June, according to CryptoSlam data. Tom Tierman of NFT rental platform IQ Protocol says that the persistent creation of Ordinals is a strategic move by investors who are aiming to position themselves advantageously for the anticipated future expansions of Bitcoin NFTs. Tierman told Forkast, "As we often see in other vital innovations recorded in the industry in the past, Ordinals are bound to regain their momentum after a remarkable use case is tagged with them." Meanwhile, the Bitcoin network maintained its position as July's second most active blockchain in the world for NFTs ranked by sales volume. Andy Leon, author of NFT From Zero to Hero, told Forkast, "The decrease in revenue is likely indicative of a general downturn in the NFT market, affecting all types of NFT services and not just Ordinal inscriptions." David Atterman of crypto-based engagement platform MostFan agreed with Lian. He said, "Projects that do not carry utility for new users and that do not focus on mass adoption quickly lose their significance and are unlikely to recover at the next bull run. And NFT enthusiasts hope the next Bitcoin halving in April 2024 could trigger a bullish period for both crypto and NFT markets, allowing investors to book profits off their crypto holdings, recycling liquidity into NFT collections, and driving the next NFT bull market. Only time will tell if this comes true." Zoltán Vardai, Forkast.
From Bitcoin Ordinals to an NFT offering from Asia's oldest commercial airline, Philippine Airlines has launched limited digital collectibles on the Ethereum blockchain in partnership with Philippine Blockchain Week. The collection, designed by artist Trace Orozco, comprises of 8 unique images, and each collectible gives the holder airline miles worth $1,500 along with access to the Philippine Blockchain Week for the next 3 years. Now that's an interesting NFT use case. And of course, we're going to learn more from Philippines later this fall. We're going to be there. We're also going to be at the Philippines Blockchain Week on the ground this September from our correspondents around the world. But in America, let's bring in Yehudah Petscher right now, our Forkast Labs data analyst, to talk about all the big moves in NFT markets this week. Good to see you, Yehudah.
It's great to see you. Let's get right into it. We are looking at an NFT market that, again, is struggling. It's struggling to find its footing. We're seeing that reflected across the board. The Forkast 500 NFT index is down around 5%. And we see similar declines on the Ethereum composite, also on the Polygon composite, Solana, and now Cardano as well. As far as how bad is this market right now, how low is it? Well, the week ending July 30th, global sales were $86 million. That was the lowest global sales we've seen in a week period since June 2021. Specifically, the week of June 7th, 2021, where we had $75 million in global sales. So that was a time before the masses had really come into NFTs. And seeing sales volume now that mirrors that is it's something to be mindful of as far as the direction this space is heading. I do want to mention, though, that sales isn't the only metric to show growth. In fact, unique buyers, unique sellers, and total transactions were outpacing what we saw in June 2021 2 to 3 times. So we are growing, like I mentioned, just not by sales volume, but when you have more buyers and you have more sellers and you have more transactions happening, it can only mean one thing. There are more people in this space. They do still want NFTs and they do want to collect them, but maybe at a cheaper price point. This is a sign of where we're heading. Higher volume, lower prices, NFTs with mass appeal, and we are seeing that on the leaderboards right now with very specific projects. You have D-Market with their video game skins from Counter-Strike Go and from Team Fortress 2. That's on the Mythos chain. You have Gods Unchained on Immutable X, and that game actually appears on the Epic Game Store, doing really well. Both of those in the top 5 on a regular basis, and both of them doing around $5 million in sales for the week. You love to see them succeeding in this market. You also have a few NFT projects on Binance that have also entered the top 10 and are offering pretty unique products, unique utility for NFTs. One, AI World nodes. They are nodes or processors that holders purchase and own. I believe these are actually processing transactions in this AI World's ecosystem. Holders of these NFTs will be rewarded with a platform currency. It's a pretty innovative use for NFTs. You also have Play NFTs, which is a watch-to-earn platform that connects content creators on YouTube with their viewers, with their community, and it also rewards them. Sotheby's also had a very, very big launch last week with their new fully on-chain generative art platform. In this new platform that's powered by the Artblocks engine, we saw the release of a pioneer's work. This is the 99-year-old Vera Molnar, who released her first ever NFT collection. It's a 500 edition collection that was sold via a Dutch auction where the price actually declines until you find the price buyers are willing to come in at. It sold out around 1 ETH, and a few days later, with the secondary markets taking over, that pushed the collection up to 4 to 5 ETH. We even saw a 10 ETH sale. So in this down market, we're still seeing art do exceptionally well. The Bitcoin ecosystem, well, it's struggling tremendously. Well, this past week, Bitcoin couldn't even cross the $5 million mark, and on a daily basis, struggling to do even $500,000 in sales. We're seeing the limitations of the Bitcoin tech, which doesn't offer smart contracts. Now, collectors haven't left Bitcoin entirely. In fact, just this week, we saw the single highest day of ordinal creations with over 420,000 new ordinals created. It's just the secondary markets that have disappeared. Ultimately, the question is, if you're going to invest in the Bitcoin ecosystem, what would you rather be investing by buying Bitcoin itself, or would you rather be buying these little JPEGs? And I know for me at least, it's I would want to be buying Bitcoin itself. As far as what's on the horizon, what can turn this market around? Well, you have the end of Blur's Season 2 reward farming. Likely it'll kick off a new Season 3, and what that'll bring is more wash trading, yes, but also more liquidity. And more importantly, we have Yuga Labs Ape Fest 2023, which is happening in Hong Kong. That's in November. There are rumors that it will also be the launch of Yuga Labs' Other Side metaverse. This is a metaverse that can have 100,000 people all in the same instance, running around and chit-chatting through voice chat. Very impressive. So now consider that their plans are to have big concerts in the Other Side metaverse. Add in Apple's Vision Pro into that fold at some point over the next few years when you can go to these experiences in AR, VR, and they're not as rough as they are today. Again, this will change the shape of the music industry. So that I'm looking forward to. When that happens, though, expect to see NFTs populate everything you see there, and expect to see a boom, maybe like the good old days of last year in NFTs. It's a little while off, though. Back to you.
All right, thanks, Yehudah. Always good to see you, and I appreciate it. And on that note, let's take a quick break, and we're going to focus in on the country that was home ground to the FTX blowup. We're talking about none other than the Bahamas on the other side. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
Welcome back to Forkast IQ. All right, the Bahamas, known for its pristine beaches, clear waters, scenic beauty. Well, it got a little ugly and got shook to the core late last year. The reason? Yeah, we're talking about the collapse of FTX, one of the world's largest crypto exchanges at the time, headquartered in the island country. Forkast's Maha Shah takes a deeper look at how this event has impacted crypto's future in the Bahamas.
It's been 8 months since the collapse of FTX, which at the time was among the top 3 crypto exchanges in the world. But the aftershocks can still be felt. Billions of dollars in customer funds were lost, ushering in a wave of uncertainty and lack of trust in the industry. This also had a profound effect on Bahamas, a small nation of 400,000 people spread over some 700 islands, which has ambitions of being a crypto hub.
A lot of the Bahamians that were employed, best and brightest in the country, that was a sad part about the collapse, was to see that and to see, them have to divert and change and reshift.
FTX Global first opened its headquarters in Hong Kong, but moved to the Bahamas in September 2021 in search of friendlier crypto regulations.
It's the marriage between the regulatory framework and I think the banking industry here, the offshore banking industry here, has really opened its doors to facilitate a lot of what's happening with this regulatory framework. And so I'm not surprised that our jurisdiction can easily adapt to be able to serve the players in this space. Also, our proximity to the US gives us an edge.
The country is known as a tax haven for foreign investors, as it doesn't charge personal, capital gains, or inheritance taxes. There's also no corporate tax to be paid by companies unless revenue is generated within the Bahamas.
These companies that are coming here are not subject currently right now to corporate income taxes.
Attracting companies like FTX was Bahamas' attempt to diversify from tourism revenue, and digital assets were a big part of the game plan. Bahamas was one of the first countries to issue a central bank digital currency called the sand dollar that was rolled out in October 2020. But the response from its people has been lackluster. In an effort to incentivize its use, the central bank is offering $1 million giveaway in sand dollars to early adopters during 2023 and 2024.
The adoption pace right now needs help. And if the government were to begin to pay all of its employees in sand dollar, if there were, lending environments in sand dollar, if there were investment opportunities in the sand dollar, all of these things are ways for mass adoption.
The country that was once known as the pioneer of digital fiat drew flack over its handling of the FTX crash, but the locals think otherwise.
So we have always had in the Bahamas a pretty robust regime, believe it or not. We get cracked over the head quite a bit from the OECD nations, the international, markets in terms of, and we're always striving, changing, adopting, complying, right? And so it's like it's a never-ending game where we're constantly trying to please the world. And I think we've done tremendous in terms of advancing regulations. We've been ahead of the game.
Bahamas is just 180 miles from the east coast of Miami, but a world apart when it comes to crypto regulations. In 2020, the country passed the Digital Assets and Registered Exchanges Bill, or DARE.
It was the strength of the DARE Act that enabled the Bahamas to act first and act decisively on FTX, with the Securities Commission quickly putting the Bahamas-based entity into provisional liquidation ahead of their filing for Chapter 11 bankruptcy, and securing FTX assets, which had a market or trading value of around $3.5 billion at the time they were secured.
And the latest iteration of the Act came out this year.
The new DARE Bill 2023, it has a couple of things that I think are revolutionary. The first thing is that they've included a clause on stablecoins. They've also included staking. That's something I definitely have not seen in any of the neighboring legislation for digital assets. Now, liquidity measures were also tightened in this new version as well.
But have the loopholes to prevent another FTX-like fiasco been closed?
I think the best response would have been the things that the Commission did, including tightening some of the requirements for monitoring and for liquidity. The first act, it left it solely to the discretion of the Commission to monitor. This act lays out the types of information that's mandatory to submit.
The amendments will address a comprehensive range of digital asset activities and strengthen protection mechanisms for the registration and ongoing supervision of operators. They represent an even greater focus on consumer and investor protection, robust risk management, as well as market development and innovation.
But one thing remains. The island nation still has an appetite for digital assets, and it is taking steps to ensure that the Bahamian market remains competitive in the global crypto landscape. Maha Shah, Forkast.
Well, that's a wrap on this week's show. Thanks for tuning in. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching wherever you are, from home, your hotel room, the office, the trading floor. It is easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ, get intelligent in Web3.